episode, we're going to talk about getting pre-approved. Before you even start looking for a home, you want to get pre-approved because at that point you're going to know what you can afford, how much you want to spend. You're going to have that letter with you, and in today's market, when things are a little crazy with low inventory, you're going to want that pre-approval letter to give you a shot at getting that home that you decide you want to buy. So that's first step. So some things to look for with a loan officer is, number one, make sure a loan officer can get you good rates. That's important. You want an officer that's going to get you to the closing table in a timely manner. You don't want a closing date and then they don't do their job. Things slip through the cracks if they're not on it, and suddenly you can't close on the day that you intended on closing. So you want to make sure they can do that. You want a loan officer that is going to communicate with you throughout the entire process. You want to be updated along the way as to how things are going, so you're not concerned. And a good loan officer should always be willing to answer any questions you have at any time, just to ease your mind on the process. So we're at Renaissance Bank, and we're going to go in and talk with Richard Collins, who is who I use. I refer all my clients to him. He makes the process so fun and easy, and you'll see. We're going to talk to him about what happens during this process. So here we are at Renaissance Bank in Midtown. And I wanted y'all to meet Richard Collins, who I've used for about a year and a half now, I think. He's just been great. Working with my clients, I've had quite a few first-time home buyers that it's a scary process, but Richard makes it fun. He's extremely efficient, gets us through the process. We've never missed a closing date. So anyway, I'd like to introduce Richard Collins, and welcome. Thank you.
Thank you, Jodi. I appreciate you guys coming out.
Yeah.
Great to see you.
You too. You know, a lot of the things, one thing I wanted to touch on, Richard, is a first-time buyer, and they're wanting to go out and buy a home. They've made a decision. It's time for us to buy a home. As an agent, my first question is, are you pre-approved? Because we don't want to go look for homes unless you have that letter.
Absolutely.
That pre-qualification, pre-approval, whatever you call it. We need that letter, and that's where you come in.
Yeah, absolutely. You're definitely correct. I mean, it's kind of putting the cart in front of the horse.
Mm-hmm.
You know, outside of being a lender, I'm also a consumer, and I remember when I was looking to buy, you get online, you see these houses that catch your eye, or a condo or whatnot, and you kind of want to look at it maybe to see if it's even something you're interested in. You know, if you're definitely interested and you don't have a certain property picked out, it's always best to do that pre-approval up front. You know, once we have the full application and your supporting documentation, we can kind of tailor it and then say, well, this is your purchase price range. And a lot of people appreciate that because it saves a lot of time in looking at homes that are out of their price range, or maybe just more than they're wanting to spend.
Right.
I didn't realize a house that much was going to be this much a month.
Right.
And so it kind of pinpoints it a little more down. And then, you know, the area of town or the type of home. Are you looking at a condo or a single family home? Or are you looking at, you know, one of the Bartlett or Germantown, you know, or the city of Memphis? I mean, all those things are a little bit different in what your buying power is when you look at your total housing ratios, your total housing payment of taxes, insurance, those sort of things. Mm-hmm. You don't want to see that dream house come up and you're ready to make an offer and move forward, and you haven't talked to a lender yet. You know, you're in this stress of this, you know, I got to get pre-approved, and then it's rushed. And sometimes people don't really know they're quite in the market until they're driving home from work and that house they've always loved, they see the sign in the front yard, and all of a sudden it's go time.
Yeah.
I mean, I typically like to have just an initial upfront conversation just to kind of answer any hypothetical questions, or, you know, just kind of explain the process. But really the best thing to start with is an application. We use an online site that's interactive. It's not like filling out a form. It's just going to ask you some questions. It gives us permission to run credit. It kind of, you know, tells you, it asks them what kind of price range they're looking for. But it's mainly the basics of your employment history, your income, how much, you know, you keep estimated in assets, and kind of what you're looking to put down.
Okay.
And then once they complete it, I get a notification that it's been completed. And the cool thing about it too is kind of a newer technology is depending on how they answer, the system's going to automatically prompt and ask them what to upload. So if you say you're a salary wage earner, whether it's hourly or salary, they're going to ask for W-2 and pay stubs. Definitely you want to, when you're preparing, you want to get your affairs in order. And we're going to ask for, it's kind of cycles of two. We're going to ask for your most recent, if you're a wage or a salary earner, it's your most recent 2 pay stubs, your most recent 2 years of W-2s,
Okay.
and then your most recent 2 bank statements.
Okay.
So it's 60 days of assets, 30 days of income, and then your most recent W-2s. Your income will be qualified off your current pay stub. So if you got a raise, a pay increase between the end of, say, last year, 2019, to this year, we're not going to base your income off the 2019 W-2. It's going to be off your current pay stubs, your qualified income. But we want to see a history.
Right.
That they made, this is what the earnings in 18, 19, and now 20.
Right.
And it's always best if you're inclining. I'll import their application into our operating system. I'll go through every page, every box, fill in any blanks, make notes of anything that I have questions on or that they might have missed, and then you're going to run a credit report.
Right. Well, tell me about where we are. Interest rates right now are pretty amazing.
Pretty amazing. We're at historic lows. Rates are they're gonna trend off the overall market, off the bond market specifically. A mortgage is actually it's going to be a mortgage-backed security. So when you're doing, say, a conventional loan, it's going to be, you're going to follow the guidelines of the 2 main agencies, either Fannie Mae or Freddie Mac. They're always going to set the rates on a daily basis off the overall bond market, specifically like mortgage-backed securities and treasury notes. And so it is going to change up a little bit. It's a great time to buy. You're going to be able to afford more house because your monthly payment's going to be lower because of the lower interest rates. It's a great time to still refinance. Anyone that their interest rate starts with a 4 should probably be interested in looking at a refinance on a primary home.
So how important is a credit score?
The thing that I'd absolutely recommend is, whether you're a first-time home buyer or someone that hasn't done a mortgage process in a long time, is look at it yourself before you apply. Okay. You want to make sure that what's showing on the credit report is accurate, because you're looking at 30 years. Granted, a lot of people aren't going to stay in the same mortgage or the same home for 30 years, but you might. And you're doing a long-term permanent financing off a screenshot today. So, but the way loans are priced, not just qualified, you do have a minimum score to qualify. It depends on the loan program. Here we would want to see at least a 620. FHA will let you go a little lower with some lenders, down to a 580, but we have a minimum of 620.
Do you have any recommendations to tell the people between now and closing?
Yeah, sure. For the most part, if you have most of your documentation, you're going to get the sales contract, you're going to review it. First thing we're going to do is send you a disclosure package. It's not a contract. People think sometimes it's a contract, but it's just an initial disclosure, and it consists of an application that gets signed, initial loan estimate, and then your standard loan disclosures. But we'll get all those orders made. And then, there could be a little quiet time while we're waiting for the appraisal to come back and some of those orders to come in. But
they're under contract, they're with you, they're going through the process. Is that a good time to consider making any kind of changes in their lifestyle?
Yeah, that's a good one. Absolutely not. You want to keep everything as stable as possible. So you're on credit monitoring when you start the process. So from your application there, once I turn the file into processing until you close, we would get an alert if you open up a new credit card.
Okay.
And sometimes that can happen, and it's a terrible feeling when you already have a loan that's a little tight, and I got to make that call, and I'm like, guys, I'm sorry, I know you're buying a new house and you're wanting to buy some furniture, but you just have to wait until after closing because now our ratios are too high. And it could either blow up a deal or you have to restructure and scramble to keep it back in line.
Right.
And you can still use your card normally. We're not saying you can't use your card. I mean, you just keep using it however you had. If people use cards at the pump.
As long as it's consistent
as long
with
as
what
it's
it
consistent,
is
yeah.
from when you first run
You just
it.
don't want a huge jump of, buying, a whole new suite of appliances or something right before you close.
Thank you so much
My
for
pleasure.
doing this with me
Thank
today.
you.
It's just, like I said, I think the world of you. I love how you are with my clients, and I'll continue to send them to you for sure.
You're sweet. Thank you.
Okay. You and your mortgage are going to be together for a long time, so the more you know, the better. And that's why you want to get a lender who's going to help you through the process and make recommendations based on your situation.